Good morning, traders. It's Monday, May 22nd. Taking a look at the charts, we're going to start off with the bar chart market momentum index. So you can see up here, this is on the barchart.com website, and this kind of it tracks about. It varies depending on the price and the volume of stocks each day, but more or less it's tracking about 4,500 stocks. And long story short is when they move a certain percentage, say 1% down, on any given day, it's more or less, it drops us down as 99%. So this is an oversold level in the market. And when there's a strong rally and the majority of those stocks are rallying up over a percent for any given day, it gets up into this overbought territory. Now you can see over the last couple trading sessions, the market came down into this oversold market condition, and then the next couple of days rebounded and ripped all the way to the upside, putting us into this overbought market condition. And so obviously we're looking a little bit overdone to the upside. That being said, the markets looks as though they've had a pretty good washout low, some good panic selling in the market. If we just go over to this is the SP 500 daily chart, this shows us clearly where we're at with more or less we got into the oversold condition a couple days ago, dipped down here, and then last week we closed in the overbought condition, obviously flushing down, rebounding, and now we're kind of into this resistance, into this high volume phase here, which really continues all the way across over to this previous high as well over here. So huge volume. Feels as though it's a fairly significant washout low in the market. If you look at our short-term cycles, we also had the short-term and momentum cycle bottom out, and then on Friday, more or less, they came and the momentum got to the overbought market condition. So we're kind of going to ping pong around in here. The markets feel as though they're kind of set. They've kind of cleansed themselves to continue to move higher, and we've seen a nice long consolidation through here. When they do break, if they do break higher, probably going to see a fairly significant run, more or less, if we were to zoom way out on the chart and then squish this price action down. Let me just drag the price down here. We're looking at price to more or less run to the 2,500 mark. That's where I think we could eventually see this go. Whoops, let me grab a different tool here. Could eventually see this run all the way up, the next run higher into this 2,500 mark up here, which would I think put in a fairly significant high. It's a pretty significant whole number. And it's about a similar measured move to what the last run was out of a multi-month consolidation. So that's kind of what I'm looking at going forward. Obviously, if we see stocks continue to take off and move higher and break out, we're going to see money kind of flow out of the safe havens like bonds, which if we take a look at the chart of bonds, they're trying to build a base here. Let me just zoom out a bit, but they are trading up at resistance, so likely they could fade right back down and go out of favor for a while. If we take a look at silver, let me just focus on the price action here. Silver could easily still be potentially moving down, depending on how you want to look at it. There's potential for an A, B, C correction, kind of flushing the market out as the equities markets rally higher. Also, you've got this potential much larger bear flag forming, and we could see it come down and potentially test the 2016 lows and kind of finish cleansing to the downside there. If we look at gold, gold is more or less got a couple different cycles here kind of playing out, and it feels as though it's got a bullish kind of angle here with its sawtooth, but it feels like it's changing directions, and it could easily start to be breaking down, and we could see that flush down to test these 2016 lows as well. So we have to see what's going to take over the next few days. Silver's already broken down. It's more or less trading broken down here and is forming a bearish formation and potentially heading lower. Gold's holding up a little bit more as the safe haven play, but overall feels as though it could be starting to kind of top out here in the next little bit. I am bullish on gold long term. If we just take a look at the very long term chart of gold, it feels as though we've kind of put in a significant low over here, and the market could easily just kind of fade back down and continue to build a very large base You never know. It may poke down to nominal new lows. We could see this continue to move down. But overall, I think this is kind of the first half of the market bottom over here. And then worst case scenario, we see maybe potentially another significant low over there. And eventually it works its way up and breaks this 1400 mark. And then, of course, I think it'd be off to the races. But yeah, you can see where we're at in the grand scheme of things. We're kind of at the halfway mark. Potentially this is the halfway mark. And you never know, we could end up building a base and holding well up here before breaking out. But there's still a lot of work to be done in the precious metals sector. And if equities are going to go rally and go parabolic more or less to rip to the 2500 mark, I think we could easily see interest fade in precious metals, and we could see this underperform for a while. And it's the same with miners. Take a look at the miners. Again, they're trying to work through a base here, and you could argue that they could easily continue to move down and fade back down into this area over here and continue to work through a big basing formation, which eventually they'll break out and run to the upside. Now, taking a quick look at the chart of crude oil. Crude oil, obviously 2014, 2015, big bear market, came down, put in a double bottom, and it's working through a basing formation as well. Commodities across the board are really have been in a major downtrend the last couple of years, and some of the big commodities are trying to build these massive basing formations. Precious metals, crude oil, natural gas, they're all kind of trying to build a big basing formation. And obviously the US dollar has been very strong over the last couple of years, and of course it has helped put the downward pressure on things. Overall, crude oil continues to move up today. You can see we're having more or less a reaction high. If you were to just draw across these tops here, there's potential for it to continue to move up and get into this resistance zone, stretch a little bit higher. It does have it's had a nice little run here. It's consolidated, a little tiny tight barrel bull flag, and it looks like we're pretty much going to that, going to potentially hit the second level. Still, we have got lower lows and lower highs, and the market could easily chatter around here for a while, and we could see crude oil kind of build more of a base. One sector I really want to keep my eyes kind of peeled for, there's potential head and shoulders formation starting to form here. Where we've got kind of like a shoulder here, we've got a head here, we've got another shoulder here, we've got a pretty dominant neckline across here. And it's hit this level a couple times and bounced. Financials typically they usually need to be part of the market for a very strong rally to take place. And if it breaks below this, things could get pretty ugly. And if you look at the weekly chart, it really shows you the pattern pretty clearly where we're at. Here is the potential chart on the weekly, and you can see here we're potentially a few weeks away from it potentially breaking down and selling off. And if that was to happen, we could easily see it drop somewhere down into the 2150, 21 area to the downside. And if that does, we're going to see the market kind of really cleanse and wash out to the downside. And I think that would put some serious downward pressure on the broad market like the SP 500 and the Dow, because the financials are a big part of that, pretty heavily weighted. So something to keep an eye on. At this point, we're seeing financials and even small cap stocks, they're still holding up. They've been trading sideways in this formation. The small cap stocks have had a nice strong pop, pushed to new highs. They're kind of fading and kind of falling back down, actually in somewhat of a bullish formation. I kind of like this, how it picks up speed, dips right down to a moving average into the lower end of support and bounced. All we need to do is see some follow through, and I think we'd be off to the races to new highs again. And that's where we're at. These two kind of the small cap stocks and financials are on the verge of having a big move. The question is, are they going to break down and lead the market lower, or are they going to pop and break to the upside and lead the market higher? When they do break out in either direction, I think it's going to be a fairly significant move. Keep in mind, this is a weekly chart. So we're talking, if this breaks down, we're going to see a multi-week, a month or two long, probably long sell-off. If this breaks to the upside, we're going to see a month or two of rally mode. And so these are some big moves starting to build up pressure. And the question is, which way are they going to break? And that's what we're going to keep our eye on. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.